they act like a support and a resistance level as well. There is some serious research and analysis work that goes on for any share. Current stock price is trading at 100. Okay, give me at 103. It is visible that there is no trading activity done over here. Now this gap over here, it could be dangerous. Stop loss is must. Yeah. Without stop loss, never come into the market. As a trader, don't be Yudhishthira.
Hello strikers, welcome back to the channel. This is Nimisha and in today's video, we will be covering trading gaps. We have Zubin with us and he will be throwing some light upon the topic. So let's get started.
Okay, gaps. Gaps, Nimisha, are a very important things that we can spot on the chart. And these gaps, they act like a support and a resistance level as well. And these gaps also offer trading or investment opportunities. So before we understand how do they act like a support and resistance, how do they offer trading opportunities, first let's understand how are gaps created.
Correct.
All right. So let's say, for example, if on a particular chart there is a red color candle. All right. Now, as a red color candle, you know that the opening price is over here and closing price is at the bottom. All right. Now, let's assume this is a daily chart. So, closing price is the last traded price of that day.
Correct.
Now, let's say this particular price was 105 and closing was at around 100 rupees. Now, tomorrow, see, after the day ends, no, in the evening, there is some serious research and analysis work that goes on for any share. Now, especially the institutions, they do a lot of research work. And if they feel that this stock has a big potential and the stock is available at a very good valuation, whatever, so what they will do is they will try to buy at the best price possible. All right. So the next day in the morning, if somebody buys, places a buy order at, let's suppose, 103 rupees. All right. Now what will happen is, if there are two categories of people, retail people and institutional people. Now, most of the retail people, what they will do is, if the market price is at 100 rupees, these people will like to place a buy order at a lesser price, below 100. They would like to buy below 100. And if they have this share in their demat account, they would like to sell their shares at a higher price. All right. Nobody will say that, okay, the price, the current stock price is running at 100. Okay, give me at 103.
Yeah.
Yeah, 3% above the market price. So this way, no retail people will behave. But institutional people, what they will do is, they will say, give me. If they feel that the stock has potential, they are ready to buy even 3% higher than the previous days. So what happens is, the next day, the opening price, if the opening price is over here at around 103 rupees, and let's suppose the price during the day goes and closes at around 106 or whatever. All right, but the important thing to see over here is, from 100 to 103, this is called as a gap. Generally, what we see is that this is a normal candle, green color candle, opening here, closing here. The next day, we say that the stock has opened up with a gap. So prices opens over here and maybe it goes up further. So this becomes your opening and this becomes your closing. So this area over here between the close of the previous day and the opening of the current day, this becomes your gap. Now this gap is easily spotted, but this gap over here cannot be spotted easily.
Because it is a very small gap.
No, not a small gap. It may be of 3 rupees, this may be also for 3 rupee, but on a chart it is visible that there is no trading activity done over here.
Here so, the candles are like
yes, so over here also there is no trading activity done, but this cannot be seen on the chart, clear chart, but still it is a gap. And this type of a gap is called as a partial gap. Partial gap. All right, very effective gaps, and even this gap is also very effective. All right, so we need to see where is this gap coming, in an uptrend or in a downtrend. So generally, let me give you an idea. If a particular stock price is trending, let's say if a particular stock price is trending down, all right, and when there is a downtrend like this, and there is a gap up opening over here, now this could also be a gap, right? This is also a gap. It is also seen, but the actual gap is not so small. The actual gap is this big. What is a gap? Gap is nothing but the previous day's closing
and the new opening.
and the new opening.
Correct. So the
Alright.
gap is this way.
Right. So compared to the partial gap that I showed you earlier, here in this case, there is a super big opening. So this is even more effective. And whenever in a downtrend, you get such kind of a gaps. All right. This gap will act like a trend reversal.
Yeah.
Trend reversal. All right. And you would see that from here the stock prices can
Goes
start
up.
going up. Now in these gaps I told you, it also acts like a support and resistance. So what can happen is when you draw a gap line over here, when you draw a gap area, so this area, okay, this acts like a support level for this stock.
The entire area.
The entire area. So many times what will happen is the stock will not go up, but it will pull back. Do you remember we learned about the breakout and pullbacks?
Yeah.
So the stock can pull back down towards the support area, and from here it can continue upwards.
So this is the entire support zone.
Yes, you can say it is a support zone. All right. Similarly, so now whenever there is a downtrend on a gap up opening, it is a good gap. But many a times, what happens is the trend itself is up.
Okay.
The trend itself is up, and then you find a gap up opening. Now, this gap over here, in an uptrend, there is a gap up opening. It could be dangerous because already the stock has gone up crazy, and over there is a gap up opening. So probably many people call this as a exhaustion gap. So the trend may be exhausted.
Also, no?
No, the closing is over here.
Okay. Yeah.
The closing is over here, opening is over here. This is a green candle. If it was a red candle, then this was that could be a gap. So whenever a trend is prolonged uptrend, and in a prolonged uptrend you get a gap up opening, that could be an exhaustion gap. Okay. So in this gap, it is better that you be very cautious and don't fresh buy into it. Or at least if the fundamentals are good, what you can do is you can wait for a pullback, and then once it is bouncing back again, you could buy with a small stop loss. All right. So out of these two gaps, when the trend is up and you get a gap up opening, this is a little bit risky. But if the trend is down and you get a gap up opening, that is more a good sign you can enter for to buy. All right. Similarly, if the trend is, let's say, down, yeah, continuously it is down, and then you get a gap down opening. Yeah, let's say this is a gap down opening. So over here, close to opening, this is a gap. So this could be a exhaustion gap. So don't try to fresh sell over here. If the fundamentals are really very bad, then what you can do is you can wait for a pullback, and then with a stop loss you can sell. All right. And gap down, when will you take a gap down opening? When the trend is positive. All right. When the trend is positive and all of a sudden you get a gap down opening. All right. So overall, from closing to the opening, this is a gap.
Correct.
All right. Sometimes you may also get a red candle over here and a gap down thereafter. So this could be a gap.
Yeah.
So in an uptrend, when there is a gap down opening, this could work more effectively rather than when there is a downtrend and there is a gap down opening. Did you understand that? Yep. So this is gaps which acts like a support and resistance, and it also acts like a trading signals.
Yeah.
All right, let's look at some examples out here on real chart. Before we move further, how to find which stocks there is a gap up or there is a gap down out of 5,000 stocks? Simple. Log on to web.strike.money. There is a scanner section. In the scanner section, there is a gap up and gap down stocks. If you select gap down, you will get the list of stocks which have gapped down today. And if you want a list of stocks which have gapped up today, you can select your own basket. You can have your indices. You can have your F&O basket, and in the F&O basket you can see that SRF has opened up with a huge gap. You can add on to your studies as well over here. So my friends, what are you waiting for? Hurry up. Start your 7-day free trial. Log on to web.strike.money. What do I have here is Divi's lab chart. And in this Divi's lab, you can clearly spot out a gap over here. Can you see this? The mouse?
Yeah.
On 9th October.
Yeah.
Yeah, on 9th October, the prices opened up with a gap. Yeah, on 8th of October, the closing price was somewhere around 5547.
Yeah.
And the next day, the opening was at 5656. So, what you can do is this gap, you can draw a rectangle over here from the closing price to the opening price of the next day. And once you draw this rectangle, this area is working like a support level. Have a look at this. See, prices came down, took a support, came up, took a support, came up, took a support, and came up. So, if Divi's Lab fundamentals are very strong, what can an investor do? An investor can probably on a gap up opening immediately, he can buy few shares over here.
Yeah.
Or probably if he has missed out on this opportunity, you can wait for a pullback and try and invest at these levels with a small stop loss. Stop loss is must.
Yeah.
Without stop loss, never come into the market. Yeah, you know why? See, are you aware about Mahabharata?
Yeah.
Yeah, in Mahabharata, there was one character called as Yudhishthira. Yudhishthira say that as a trader, don't be Yudhishthira. Why is because while he was playing that game against the Kauravas, he lost everything. He kept on playing, he kept on losing, kept on playing, kept on losing.
Correct.
So I feel he did not know how to put stop loss. So he lost his entire money.
Yeah.
So just like that, if you are an investor or a trader, you're not putting a stop loss, then you are Yudhishthira. Don't be Yudhishthira. Okay. So yeah, that was gap over here. Now let me show you one more example. And if this gap, it's a daily chart. On a weekly chart also, sometimes you will see a major gap up or a gap down.
Yeah.
All right. Now on a weekly chart, meaning any gap up opening on a Monday.
Okay. Yeah.
It will create a gap on a weekly chart. Now, understand, as I said, these institutional people, they are doing a lot of research after the day ends in the evening. And there is more research work and there is more thought process laid down during the weekends on Saturdays and Sundays. So, after a lot of thorough analysis, they decide on a Monday that we will be, buying the share at a higher price, which creates a gap on a Monday.
So that means between after Friday.
So
The
this is a
next
Friday
week, yeah.
closing. Yeah, this is a Friday closing. The next week on the next Monday, it opens up. So this becomes a gap. Now this gap is also very strong. All right. And prices simply moves up from here on. All right. Have a look at this.
Here also.
Yes. Such a superb gap over here. All right. Prices comes down, takes support at this gap area
Then it
and goes back. Right. So these gaps area work like a beautiful support level. All right. Now, if you know about Fibonacci levels, right? If you don't know Fibonacci, if viewers don't know about Fibonacci, they can go back to the previous video,
Yeah.
learn about Fibonacci ratios. Now, if you combine Fibonacci ratios and gap, and if that gap area appears somewhere at a Fibonacci level,
Yeah.
that becomes even a stronger area of support or resistance.
Got it.
Let me demonstrate how. Okay, in this particular chart over here, what do we have is we have a strong uptrend from here. Yeah, from here the prices have gone up crazy. So we will apply this Fibonacci retracement from the bottom of the trend. Yeah, this is the bottom of the trend.
Yeah.
And we will take it to the right on top of the trend. Now have a look at it. 61.8 percentage is coinciding with the gap area. 61.8 coinciding with the gap area. Strong support, strong support. Prices dips down to this, creates a lot of fear with this red candle. All right. But what happens? Dojis appear at the support area and from there, no looking back. Yes, it bounced back sharp. So remember, combining Fibonacci and gap, very rare, but if you find it, it works beautifully.
Correct.
Okay, so that was a gap up opening. Yeah. Now let me take some another example where we can see some gap down opening as well. Reliance, favorite of all, right?
Yeah,
So look at this. Reliance on a weekly chart. This is again a weekly chart, right? On a that was a gap up. Okay, gap up, but
gap down.
yes. So this good you spotted a gap up opening. What happened was this gap up opening, it got failed.
Yeah.
So it's okay if you would have bought the share over here. The idea is to put a stop loss and get out of it. From here again, there is a same level. There is a minor gap up and prices goes up. Forget these two gaps. Can you see this gap over here? It is even a larger gap down. Now see what we mentioned, when the trend is up, and in an uptrend you get a gap down opening, it is a strong gap. Yeah. So you mark this level over here. If you are holding Reliance and on a Monday Reliance gaps down, what can a investor do? At least book partial profits, sell it off.
Correct.
Yeah, prices comes up. Yeah, it pulls back up, takes resistance, and then again creates a red candle and a bigger red candle, and the prices are down to this same gap area, creating a hammer.
Correct.
So now see one by one, what is a hammer? Go back to the video and learn what is a hammer. It appears at a support level. Gap area is a support level. So from here we can again expect a minor pullback.
Correct.
All right. Even on a daily chart, if you can see, Reliance gave us too many chances. One, yes, the first gap over here on 22nd of July, prices came down. There was another gap down opening. So these two gap down is giving you signals that okay, Reliance is headed downwards. All right, comes up, takes resistance, comes down, comes up, takes resistance, creates a kind of a bearish pattern over here, comes down, again a gap down opening out here. So these are some serious gaps down, and the prices comes down, and here look at this. This is a kind of a partial gap. Now this partial gap you cannot see, right?
Correct. We cannot
This
spot that.
yes, this gap can be spotted, easily spotted, but this is a partial gap. This is a partial from the closing price to the opening price. So this is a partial gap up opening. Similarly over here also, I don't know if you have spotted, over here we have a green candle closing up here and opening down here. So from here to here is a partial gap down opening. All right. So how beautifully this works out here in any stock. Let's take another stock, Tech Mahindra. On a Tech Mahindra, have a look at it. IT company, you got a major gap up like this on a particular day. The prices of Tech Mahindra trading at around 1190 and opens up somewhere at around 1247. It's a crazy, huge gap up. Now, who has the guts to buy the share almost around 5% above the closing of the previous day?
Institution.
The retail or the institution? Institutions. And who has the power to take the prices up by another 4 to 5%, creating volume of around 20 million? So this is clearly an institutional activity that you can see on chart. So what you can do is you can just simply mark this gap like this over here. Okay, buy few shares, invest in this share, or wait for a pullback and then invest and let it go.
Yeah.
All right. Yeah, when you see some gap downs opening over here, you can book some partial profits. Tech Mahindra being an IT company, fundamentals are strong.
Yeah.
Book partial profits so that you can again buy on this gap up opening over here. All right, and here we are. Yeah. Similarly, Federal Bank. Federal Bank is major gap up opening. Yeah. Look at this. The closing is over here and the opening is over here. All right. Huge gap. So this gap area in future will act like a support level for Federal Bank. All right. So this is gap and a wonderful, no need of any other indicators, but yeah, if you use indicators along with your system over here, you will get better results as well.
Thank you so much, Zubin. I have learned a lot from this lecture. I never thought that studying about support and resistance would be so exciting and, eye opening. This will really help me out in my stock market journey, and I hope this helps you also. If you have any questions or queries, you can put those things in the comments. We will try to solve those queries. Stick with us for more such videos.